Hey, and welcome to this episode of Matched Betting Uncovered, brought to you by ProfitDuel.
Yeah.
Today, we are doing a deep dive into what is probably one of the most critical topics for anyone building a side hustle right now. The matched betting scene in the U.S. has just, exploded in the 2020s. So many people are generating real, risk-free profit. But anytime you're talking about money, and especially long-term financial health, there's always one question that just bubbles right up to the surface.
Oh, absolutely. We hear it all the time. People are making good money, and then they ask, will matched betting affect my credit score? It is, without a doubt, the burning question, because the last thing you want is for this smart, profitable venture to, accidentally mess up your chances of getting a mortgage down the line.
Exactly. So our mission today is to give you a solid, definitive answer, one that's backed up by how the financial industry actually works, and maybe more importantly, to give you some actionable strategies you can use right now to make sure your financial profile is as strong as it can possibly be while you're doing this.
Yeah.
We're going way beyond just a simple yes or no.
Okay, let's get into it. Before we can even talk about how matched betting interacts with a credit score, we first have to, define what a credit score actually is, what it is, and how it's calculated.
Right. We all hear the term credit score constantly. We know a high number is good, a low one is bad, but for anyone who's not completely up to speed, what exactly is this measure of creditworthiness?
The simplest way to think about it is like a financial report card for lenders. It's just a number, usually somewhere between 300 and 850, and it's created by models like FICO. It's basically a snapshot, a shortcut that summarizes your past financial behavior.
So lenders use it to quickly figure out how risky you are as a borrower.
Precisely. A high score tells them, okay, this person is reliable, they pay their debts on time. A low score, well, it suggests the opposite. They need that snapshot to feel confident you'll pay back a loan.
Okay, so this is where we need to get into the weeds a little bit, because that number isn't just some random average. It's a specific calculation, right?
Yeah.
With different factors carrying different weights.
This is so crucial. Your score isn't judged equally across everything you do. There are 5 main categories, and the percentage weight for each one is really, really important to understand.
Okay, lay it out for us. What's the biggest one?
The heavyweight champion is payment history. It makes up a massive 35% of your total score.
35%.
Yeah. It just asks, did you pay your debts on time? Every single missed payment takes a huge bite out of this portion. So if you want a high score, timely payments are everything.
That makes total sense. Lenders mostly just want to know if they're going to get their money back. So what's number 2?
The second biggest piece is credit utilization, and that accounts for 30%. This is all about the ratio of how much credit you're using compared to how much you have available.
So if I have a $10,000 limit and I've spent $9,000, that's bad.
That's very bad. That's
Yeah.
90% utilization, and it signals high risk even if you always pay on time. The experts, they always recommend keeping it below 30%, and ideally, even below 10%.
Wow. So just between those two things, paying on time and not maxing out your cards, that's 65% of your entire credit score.
Correct. The other 35% is split between 3 other factors. You've got the length of credit history, which is about 15%, that rewards you for having accounts open and managed well for a long time.
Okay.
Then there's new credit, which is 10%. That looks at how many new accounts you've opened recently. Too many in a short time is a red flag.
And the last one.
And finally, the mix of credit, also 10%. That just shows you can handle different types of debt, like a mortgage and a credit card, responsibly.
That's a perfect setup. Now that we understand the landscape, we can finally tackle the main event. Does the actual activity of matched betting, placing all these bets, negatively affect this, very sensitive scoring system?
Right. Let's just give the short, direct answer straight away. No, matched betting does not directly impact your credit score.
And why is that? Why is it neutral?
It's because the credit bureaus, Experian, Equifax, TransUnion, they just don't track or report on gambling activity. Financial data experts like Experian have confirmed it. The act of placing a bet, even though it's moving money around, is just not considered a credit activity.
So it doesn't show up on your credit report?
It doesn't show up on your report, and it doesn't directly impact your credit history.
Okay, and this is where it gets really interesting. Because while the activity itself is safe, we have to talk about the associated behaviors. The things people might do around betting that can cause some serious collateral damage.
This is the critical nuance. Absolutely. The matched betting process is risk-free. But if you let it push you into some of the bad financial habits that are often linked with traditional risky gambling, your score is going to suffer. Big time.
So there are some danger zones we need to be aware of.
Three major ones, yes.
Let's start with credit cards. What's the risk there?
Danger zone one, cash advances. Look, we know it can be tempting for some people to fund an account with a cash advance from a credit card to get quick cash, but you have to understand what that actually means. First, you're usually hit with an immediate fee, maybe 3 to 5%. Second, and this is the killer, interest starts building up immediately. There's no grace period like when you buy a TV.
So you're basically borrowing money at a super high interest rate from day one. That sounds like a terrible idea.
It is. And on top of that, cash advances spike your debt, which kills that all-important 30% credit utilization ratio we just talked about.
And what about the most simple, universal risk, the one anyone could fall into?
Danger zone two, missed payments. It's as simple as that. If you get so caught up in managing your matched betting bankroll that you mismanage your main finances and, miss a car payment or a credit card bill, that gets reported.
And that's a direct, severe hit to that 35% payment history part of your score.
Exactly. It has zero to do with the betting itself and everything to do with just poor cash flow management.
Okay, and the third one, the one that's a real trap for people funding risky ventures.
Danger zone three, payday loans. These are these awful, short-term, super high-interest loans. People in financial trouble sometimes use them to get cash fast, but the fees and interest rates are just. They're designed to make debt spiral out of control. Matched betting should always be funded responsibly with capital you already have. The goal here is to make a profit, not to rack up toxic debt.
That's a fantastic breakdown. Okay, let's shift gears from the direct score to bigger, longer-term goals. How do matched betting profits play into something major, like applying for a mortgage?
Right, this is a more sophisticated question because it separates your credit score from your income qualification. The short answer is, while the profits you make are absolutely yours to use, they are generally not considered income when a lender is deciding how much you can borrow for a mortgage.
Wait, hold on. So if I make, say, $30,000 this year from matched betting, and I can prove it, a lender won't count that. I mean, profit is profit, isn't it?
That's a really fair point, but it all comes down to lender psychology and, frankly, regulations. Mortgage lenders are looking for one thing above all else: stability and predictability. They want to see a regular salary from a W-2 job. Or if you're self-employed, they'll want to see at least 2 years of stable, proven income through your tax returns.
And matched betting, even though it's mathematically sound and risk-free, it just doesn't fit that mold in an underwriter's eyes.
Precisely. The underwriter, that's the person assessing the loan's risk, they see the word betting and they immediately associate it with gambling. That perception, no matter how wrong it is in our case, flags it as an unstable source of funds. They would much rather base a huge lending decision on a steady paycheck.
So is there any way that money can help with a mortgage at all?
Oh, absolutely. The main way it helps is with all the upfront costs. There's zero problem with using your matched betting profits to cover your closing costs or to make a much bigger down payment on the house.
Ah, so it helps with the deposit.
Yes, that lump sum of cash shows you have liquidity, which is a huge positive for them. But when it comes to calculating the actual loan amount you qualify for, they're going to stick to your predictable salary.
That is such a critical distinction, and it leads us right into what is probably the most important strategy for managing all of this: separation.
Separation is the single most important piece of practical advice we can give you. When you apply for a mortgage, a lender is going to ask for, typically, 3 months of pay stubs and up to 6 months of your primary bank statements.
And if those bank statements are just filled with hundreds of transactions from places like FanDuel, DraftKings, BetMGM, even if it all adds up to a profit, that's going to raise some eyebrows.
It's going to create friction, exactly. The underwriter's job is to minimize risk. When they see all that activity, they're going to have follow-up questions. It's going to cause delays and, potential complications if they decide your financial habits seem too risky.
So what's the simple solution to keep that application clean?
You need to set up and use a dedicated separate bank account just for your matched betting activity. All your deposits, all your withdrawals, everything goes through that account. Then, when it's time to apply for the mortgage, you just give them the statements from your primary account, the one that shows your regular paycheck coming in and your normal boring bills going out.
So you're basically building a wall around your matched betting activity. You show the lender your perfect, everyday financial habits without having to explain why you're moving thousands of dollars between sportsbooks every month.
It's clean, it's efficient, and it protects your main financial profile. Now, some people use e-wallets or prepaid cards for this, which can work. But, word of warning, you have to check the terms and conditions. Some sports books won't give you promo offers if you deposit with an e-wallet, and some of those services have fees that can eat into your profits.
Okay, let's pivot to one last fear that I know a lot of people have. The idea of opening all these new sportsbook accounts. When I'm signing up with all these different places, can they actually run credit checks on me?
It's a very common worry, but the answer is, thankfully, pretty reassuring. Sportsbooks do not usually conduct what's known as a hard credit check.
And a heart check is the one that dings your score a little bit, right? The one a lender does when you apply for a loan. Why don't sportsbooks do that?
Because they're not lending you money. They're not extending you any credit. They have no reason to assess your creditworthiness like a mortgage lender does. They're a regulated financial service, not a creditor.
So no heart checks that drop my score. But do they do any kind of check when I sign up and give them my social security details?
Yes, they do. They perform what are called soft credit checks. Think of these more as administrative checks.
And what's the purpose of that soft check?
It's purely for identity verification. It's part of the KYC, know your customer regulations. They just need to confirm your age, your address, and verify your social security number to prevent fraud and comply with anti-money laundering laws. They're just making sure you're a legitimate person, not checking if you're good for a loan.
And this is the key takeaway, right? Soft checks are completely harmless.
100% correct. Soft credit checks do not impact your credit score at all. They're purely administrative and crucially, traditional lenders can't even see them when they pull your full credit report. It's just a necessary regulatory step.
Fantastic. So let's bring this all together. Let's synthesize this into one clear conclusion for everyone listening.
The core conclusion is this. Matched betting is credit score neutral. The activity itself is safe, and the sportsbooks are only running harmless soft checks to verify who you are.
But, and it's a big but, the safety of your score depends entirely on your own financial discipline. The risk doesn't come from the process. It comes from developing bad habits around it.
Exactly. So sound financial management is just paramount. We can't stress this enough. You should be actively and regularly checking your own credit score. Use the big 3 U.S. services, Experian, Equifax, and TransUnion. Catch any issues or errors immediately.
And what's that one final, most actionable takeaway? The one that covers both credit health and long-term goals like buying a house.
It's that best practice we keep coming back to. Open a separate bank account dedicated solely to your matched betting. It is the cleanest, most efficient way to manage your cash flow, to track your profits, and to minimize any scrutiny when you go for a major financial application. It's the difference between a smooth mortgage process and a complicated one.
You know, if you maintain that separation, the profitability of matched betting actually puts you in a really powerful position. You're generating significant capital, and you're doing it in a way that encourages organized, sound financial habits. It's almost like dual-purpose financial optimization. That strategic management is really what sets you up for those big milestones, as long as you keep those lines clean.
That's it for this episode. Thanks for listening, and we'll see you next time.